There is one stock that is about to skyrocket. The stock is $1 right now. The company is ASST, ticker symbol. It was really Asset Entities as a digital marketing sort of holding company, it seems like. Since then, they partnered with Strive, an asset management company that had $2 billion in assets under management, and they were able to make an acquisition together with Strive of another company that has about 10,000 Bitcoin. So this is now a Bitcoin holding company. And before you get a little bit of worry that it's like MicroStrategy, which MicroStrategy was Michael Saylor's company, is Michael Saylor's company. That was originally a software company. And then they weren't growing and they had to grow. Otherwise, they can't really stay in the S&P 500, right? And their best idea was to just buy Bitcoin, which they ended up doing. And then they bought so much Bitcoin that they just became a Bitcoin holding company. The way they bought Bitcoin is by issuing convertible notes, which are debt. And great thing about debt is it helps you when the market's going up. But as Bitcoin has dropped significantly, MicroStrategy has been going down a lot as well. So this company, ASST, has been raising money with more traditional financing for a startup or a public startup, which is a PIPE, public investment private equity. I know that's doesn't sound very public, but they are publicly listed. They're raising money through big investors that way. And they've raised enough money where they don't have to raise money via debt. So it's a slight difference of choice compared to MicroStrategy. Maybe that makes them a safer investment as a Bitcoin treasury. Either way, it's a $1 stock. So the upside is significant just based on where the chart is right now. They're down a bunch over the past couple weeks. That's the $1 idea, and we'll go into depth on what exactly they do, how that money raise compares to MicroStrategy's money raise, and why a Bitcoin treasury can be a good idea. Now, if you're feeling a little bit like you want another idea, I got you. Apple is my other idea. On the complete opposite side of the spectrum, they did I think it's $1 billion deal with Google to license the use of Gemini, which is Google's LLM like ChatGPT. They're going to use that with Siri. They were previously using OpenAI. ChatGPT with Siri. Gemini 3 has had excellent reviews. People really like to use it. I tried it out recently, like 10 minutes ago, and had a little hiccup with some of the financial stuff I asked about it, so I just haven't used it, but that's great because I know a lot of people who have Apple products, iPhones, are not going to be asking you financial questions anyway. So the reviews are great. That partnership's great. Apple's about to break out to all-time highs again, it looks like. So that's another idea for people who are a little more cautious. So let's jump into these ideas, starting with asset entities, ASST.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here's the deal. There's always the stress case question of, let's say Bitcoin goes down a bunch, right? What's going to happen? And we'll get to that. But first of all, are they raising money in a different way than MicroStrategy? A little bit they are. So Strive, that's the asset management company that's now merged with this company, ASST. Okay, this is their recent raise just in the beginning of this month, like 10 million from warrants, which are they're not really like debt. It just means if a price gets up to a certain level, then people can get shares that way. So this isn't a lot compared to how MicroStrategy's raising, in my understanding. And this is not debt either. This is more like shares just getting sold in the market. So it's a little bit lower risk compared to MicroStrategy. 750 million is no joke too for a $1 stock. This is the stock right now. So if you're buying it right here, you're buying it on a dip, you're buying it off that real solid psychological $1 level, and the volume is significant. I mean, we're talking about $180 million a day, $100 million a day of volume. So you can definitely buy $1 million worth and not move the stock, which is pretty unusual to say about a $1 stock that has a spread of 2 cents. I mean, you'll probably move it a cent or two, but I mean, so anyway, that's ASST. And if we look at the MicroStrategy chart, you can see it's done significantly worse. It's basically followed Bitcoin, right? Maybe even worse than Bitcoin because it's leveraged. So don't really feel that MicroStrategy is the stock to buy right now. And a lot of people are looking at ASST's chart right now as well because it's a $1 stock. So that is what it is. The more eyes, the better on a little stock like that. And the price was a little bit above ASST's trading price when they raised that 750 million. So that's not always bullish, but it's usually not bearish. No debt financing is solid. Companies that have debt, they can sort of go up in a euphoric fashion, but they can also go down very quickly. And I'm not saying ASST hasn't done that. I mean, they're crazy. Some of these moves are absolutely crazy, from $1 to like $10 in a few days. So I'm not saying that's going to happen either. I'm just saying that in general, over the long term, this is probably a better way to do financing. Not that you have to hold it for the long term, but it's a little bit of a one less red flag to worry about on a $1 stock. That's all. They do plan to not just hold Bitcoin, but also to probably trade and invest that Bitcoin. That's great. Everyone thinks they're going to be a great trader investor. So crypto trading, as we heard from the FTX situation, is not always easy, even if you're the smartest people in the world. This is the $2 billion that Stride had. And as we compare it to MicroStrategy, they issued these debt that would be converted into shares. So it's low interest rate debt, but still, 600 million is actually less than asset entities raised. This is just one recent offering, but still, it's slightly, arguably less risky. So we'll see what actually happens, but that's the argument for stability of this stock. Now, if we look at what happens when Bitcoin comes down, this is what people always talk about. It's like, yeah, this is great when everything's going up. But let's look at this scenario. Bitcoin drops 30%. And here's how much Strive has of Bitcoin, $600 million, according to the filings. And this is how much they raised, right? And they're going to they're going to issue money to raise more money in the form of dividend. So that's another instrument that they're employing, innovating on, I guess. It sounds pretty weird to have a dividend on a $1 stock, but this is what happens when you have crypto companies. They're going to accumulate Bitcoin and outperform Bitcoin. That's, of course, the plan. Of course, if Bitcoin goes down, the value of their BTC treasury falls at the same amount. And that could be a problem. 30% is a lot. I mean, drop from 80,000 down 30% would be something like 55,000, which seems pretty low for Bitcoin, but 80,000 seemed low when we were at 120 as well. So they might have to cut that dividend, but that seems like not a big deal. Of course, they might not be able to issue even stock. Or if they do, the price might go down a lot. And of course, if Bitcoin drops significantly, I think we can just be rest assured this company is cooked. I mean, let's be honest, MicroStrategy is probably cooked as well. I don't know that. I'm sure Michael Saylor has a good argument for why it's not cooked. But this is not a safe, long-term bet. So just getting that out there to be crystal clear, that's what's going on here. So they are Strive. This is the combination. This is the original entity, asset entities, still called that on this website. And this is what they used to do, social media marketing, blah, 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 Discord, whatever. And this is common, actually, a little company, not so little anymore. It's $1 billion market cap, starting to do something really different. So that's ASST. Now, if that seems a little bit, hair raising or high risk, that's why we're talking about Apple as well. So, and not just randomly, Apple is at this all-time high breakout level. If we look at a 5-year chart, here we are, all-time highs. And sure, we had a little bit of a failed breakout. Initially, this looked like it was going to be the breakout. Didn't happen, and then it did make it. The earnings, this was the 10-10 day, which sort of cooked that breakout. The earnings were solid, but the sell-off still happened. The earnings beat, and we've gone sideways, which, again, given recent moves in the market down significantly, sideways is great. We're curling up, so if the market can just go sideways even, this could break out. Of course, if it goes up, this will probably break out even sooner. Could be wrong. Some crazy news could happen, but that's definitely what the chart's saying. And then they have this partnership with Google's Gemini, which, as of recent reports, as of like a few days ago, Gemini seems to be doing awesome. People are switching over to Gemini. Not saying that OpenAI is cooked, but I'm just saying that they were using OpenAI, they switched to Gemini, and it seems like they saw the writing on the wall and chose a model that's doing super well. So they sort of get the best of both worlds. They have all the data. Gemini is licensed to them, so they use it on Apple hardware. So they get to keep the privacy, but also get the benefit of the best model. And yeah, $1 billion a year is significant, but keep in mind they were already sort of paying something like that just to have, well, actually, it's kind of backwards, wasn't it? Google was paying them to have Google be the default search engine on Apple's Safari browser. So I guess this is the opposite, but they're definitely used to cutting deals with each other. I guess if they were kind to Google, Google's kind to them now, allowing them to pay Google. But anyway, this could definitely be a problem, but probably not in the next 3 years. So we'll see what happens after that, but this is not a long-term idea. So I wouldn't worry too much about this. And look, if people are actually using Siri, that's great. If people are associating Apple with intelligence, I mean, Apple Vision Pro came out and people tried it out and it was super exciting for like a couple weeks. And then it was like, well, I don't want to wear like a refrigerator on my head. So maybe Meta has sort of won the eyewear game, which might be the next form factor. But it seems like $1 billion in a year is a small price to pay for staying in the conversation. They aren't really leaders in AI, which is crazy to say after they've been leaders in pretty much everything else. But it seems like they're just giving up, at least on the LLM side for now. And if their models do improve, maybe they'll get rid of Gemini. But right now, this is a partnership that seems to make sense. So that's pretty much what's going on in the AI part of Apple, which AI is whatever it is, 90% of the GDP of the US right now. So it seems like to be almost the only thing worth talking about, literally worth. But who knows? Obviously, Apple's main results were solid. I think they sold some more iPhones than expected. And 140 billion holiday quarter estimate, Q4 estimate. That's solid. I think they did 100 billion in Q3. So that's seriously juiced. It's 50th anniversary year. That's insane. That makes me feel old. Not that I was around then, but you get the idea. So anyway, of all the companies to look at, Apple certainly looks like it's not only in the conversation, but literally ready to break out. If we look at these other companies, Google already did break out. That's why we're not talking about Google. Other major ones, I mean, Meta you can't buy right now. You can, but you're buying a dip. Which I know everyone likes to buy the dip, but maybe you wanted to buy the dip here, maybe you wanted to buy the dip here, now you want to buy the dip here, really? And there have been other companies that have dip buying has been a good idea, but look what happened eventually, right? Sure, Warren Buffett brought United Healthcare here, maybe you bought it here, you got a pump, but after earnings, this is down significantly, and it's been tough to get position there. As far as other Mag 7 companies, Tesla holding in there, but you can't buy it here. It's in no man's land. And then Amazon, of course, got the green day today, but big sell-off after what was a solid earnings. And yeah, Microsoft sold off significantly. And even though the earnings were solid. This was the OpenAI deal where they pounded out that 27% equity deal. So those are the other Mag 7. I mean, unless I'm missing something. Let's see. Meta, Microsoft, Apple, Amazon, Google, Tesla, NVIDIA, right? So NVIDIA isn't doing so hot right now. No one knows exactly why, but maybe that little Trump is about to meet with Xi again, so maybe they'll be able to sell some chips over there and boost that price up. Point is, Apple looks the best right now. So that's these ideas. Asset entities, ASST, the $1 stock, and Apple. So if you like these ideas, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. That'll be posted in YouTube posts once a month for subscribers. And if you want to take advantage of that $19 Black Friday deal, head over to stockscommunity.com. Check out those testimonials. Pretty fire results. And look, market goes up, market goes down. It's easier to buy stock when the market is going up, but it's still important to keep the money you made and hang in there and look at where money is rotating. And right now, it seems like we're starting to get a little bit of rotation back into the QQQ, and Apple, as well as ASST as a speculative play, seem like good ideas. All right, see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.